Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 22nd of February, 2021, 6:20 p.m. So as I'm looking at the markets, you can see most of the stock indices mixed. You're down in the NASDAQ, and the NASDAQ has been under some good pressure today and following through tonight. The S&P the next weakest, and then you've got the strength in the Russell and in the Dow Jones. As for the gold market, finally back over $1,800 an ounce, but does it have anywhere to go from here? And remember, this silver market washed out just, 3 days ago, down to 26.17, 26.10, and came right back up today, 28.34. You talk about knocking people out and then taking it right back. My gosh, that's exactly what occurred. Copper market got up to 421 or so. Wow. And now it's backing off here, getting big moves in it. You know, when you get to new levels, the volatility picks up, and traders live on that. As for the currency markets, they refuse to step into a clean-cut trend. Don't know why, but that's what they're doing. Bonds and notes, a bit of a correction. And in the energy markets, as much as you think that, oh, Texas, they're getting back to normal, the shale producers are not yet. So they are behind time. They're the last ones getting the energy, as you can imagine. So you're still fairly strong in the Brent from overseas, and obviously our WTI crude. When we look at a weekly area chart of the S&P, we're down the first day of the week, 0.76%. We were down last week, as you can see, from the high point on a weekly chart, you were down 0.71. So you're down 1.5 in percentage points from its peak. So what? That's not a change of anything. When you take a look at a daily bar chart, you get a different picture here. Here you've got a pattern of lower highs, lower lows. You entered a downtrend on the swing line if you accept the fact that a downtrend is made up of a pattern of lower highs, lower lows. To break that pattern, you got to get over 39.36. So where's the likely support in the market? Well, I'd look right here at the 18-day average. I call that the line in the sand, that red line. The reason is often, if a market's up high, it pulls back to decide what to do there. Did it back here? Did it back here? I can go on and on how the market gets up to a peak, pulls back, and decide what next. So far, each decision has resolved itself with new all-time highs. Until that pattern changes, yes, a correction, but not a downtrend. Why? Because you're still closed over the 18-day moving average of closes. Bias up, swing line down. Well, why did the market break? Because it was fighting a battle first back here at the upper Bollinger Band, couldn't quite get there again, and ran out of what? Upside momentum. So if you come back with me right here, you had an embedded reading, and this was on Friday that started to falter. Today, Monday, you lost that and you made your run at the 18-day average of closes. This is just what I teach in my charting course, and it's exactly what happened. I'll be teaching this in an enhanced, after I'm through with the Bollinger Band enhanced course, in an enhanced slow stochastic course. So I put together the pricing already today and where we're at. I'm recording. I recorded all weekend. First got to finish the first one, then we'll get into that one. By any luck, maybe this week I'll have the Bollinger Band course done for release next week. Still got a lot more recordings to go, but once I get going on them, it's just a question of getting them where I want them to be, and away I go. They're pretty fast. So when I look at this market, yeah, that's basically what I'm seeing. Correction mode, not necessarily a downtrend. Close under 38.67 it would be, but the risk would be back over 39.36. I don't know how many people you're going to get interested in taking on that kind of risk. The NASDAQ today let loose. Now, if we come back here, you see that the market had a higher high, lower low, and that was coming into, this was Thursday's action, okay? So you had stepped out of your uptrend. Now the question is, were you going to lose the embedded reading? On Friday, you lost it. So when you lose the embedded reading, you're looking for a minimum challenge of the 18-day average, 13,507. Well, you went through that pretty much today. In fact, that number dropped to 13,492. Could you go down to the lower Bollinger Band near the 13,000 level? You certainly could. The trend is down. In this market, unlike something like the S&P, I think the pros are going to sell it in that 13,492 area, stops over that most recent high, hoping to get one time where the market falls. Here's what I don't like on that percentage play. When's the last time you made it to a lower Bollinger Band? Back here at the very end of October, beginning of November. So if you've been playing for follow through on the downside, it's been tedious, difficult, and generally not rewarding. When I see something like that, I say, let the other guy have a trade. There's other markets I can run to in terms of telling my subscribers what to do. And that's exactly the school I'm coming from on this. In the Dow, it's still bullish. This rules the day. Until you lose an embedded reading, it's the strongest signal. I say the pros are buying on the breaks, looking for the higher prices. Now, accept the fact that the Bollinger Band hasn't been hit since the beginning of the year. Therefore, there's another number. It's probably the window envelope. And those are for my subscribers. I put those out. You might get them from your broker if he knows how to plot them. It's a standard deviation from this number, and the question is, how do you set it? I teach that in my charting course, so it's not something that I don't use all the time. And it's there, and it's been very evident as to what's stopping that market. But again, I think the pros keep buying the break, selling out against that number. In the Russell, I was snookered in this one. I thought this was going to be the strongest of the indices. Boy, was I wrong. It turned out to be the weakest, but all it did is go back when you lost the embedded reading here to the 18-day average of closes. That's all that it really owes. And from there, the market has just drifted sideways. As it's drifting, it's working off an overbought condition. To know it's out of that, both numbers have to be under 70, the way that I teach slow stochastics. The bias is up. You're working out of an overbought condition. The swing line is down, but countered by the upside bias. In the VIX cash, this is where I'm looking for the market to have troubles. The 18 to the 100-day average. Interesting in that today, the market got its rally, lost its embedded reading, and went right to the objectives and sort of stalled out there. This market's just plain refusing to go to a lower Bollinger Band. Hasn't done so this year at all, and you'd have to go well into 2020 to see when last time it did it. So resistance, trend, what? Swing line up, bias down, momentum turning up. In the T-bond market, still a drifting market. Now, Fed Chair Powell speaks tomorrow in front of the Senate Banking Committee. We'll all be looking to see what he says about the curve yield and other parts of this market. We'll see where that carries us, but you can see what this market is very much doing. The same thing in the 10-year notes. The market is drifting to the downside. The momentum right here, you can see embedded reading. So rallies in this market, I think, are going to get sold by the pros. They won't want to see prices over 136.02, but until that's out, I think they've grabbed this market and they're dominating it. And I think it's a whipsaw time in the dollar index. Higher highs, lower lows. You're really trading against the 18-day average and going nowhere on either side of it. And the flip-flop is true in the euro. Higher high, lower low, flip-flopping back and forth and overbought. So the dollar got oversold, the euro's getting overbought, and it's a difficult trade. The market that's still very strong is the British pound, fully embedded reading. I still target the 150 level this year. We'll see if that works out in a long-term target. Trend up, bias up. Every time you break away from that Bollinger Band, as long as you have that embedded reading, I think it's getting bought, and I think the pros are kicking out those trades against that number. Bitcoin, big key reversal down day. So what? You got an embedded reading. That means until it's lost on this break, the way that I teach charting, the pros were buying the market today, and by day's end, they weren't in such terrible shape. Lose that embedded reading, well, then I can argue for the 45,000 level, another break here of $8,000. Sounds big, but in the scheme of things, is it? You know, it's not that big and with the volatility you're getting. But you haven't lost that reading. Let's see if it does lose it. And until then, Who's controlling the market? The bulls. Then we get to the April Brent versus WTI. Take a look at this. You've added $1 a barrel, which means Brent just keeps getting much stronger than U.S. shale, even though they say we're not producing it. You have a fully embedded reading until it's lost. You've been here, you've watched me. It means that I think the pros are buying here, trying to kick out at the upper Bollinger Band. WTI, you flirted right here with losing that reading, got to 80.31. That's not a close under 80 or 79. 79's number I need to break the pattern. Came right back at you today, still looking good. Remember, we're going to get tomorrow the API number in the afternoon, EIA numbers coming out on Monday. I've already seen the EIA estimate and pretty good sized draw that they're looking for overall, over 6 million barrels in the market. The heating oil still looking bullish. Market still not, we're not in spring yet, and you're still getting your demand for this, so keep your eye on it. Sooner or later, I'm going to drop this and go back to gasoline because spring is coming, and at that point, I want to talk about car driving. Last in the nat gas. That cold weather broke, and with it, prices dropped on you. But you've been overbought. You're just getting out of that condition. A hard market to try to do anything with. But when I look at them, what do you think I look at during the day in nat gas? I get people that will ask me, what do I think is going on? I'll take a look at pivot points often. Because once you learn the concept of them, it's sort of interesting to see where the resistance comes in with the swing lines during the day. I created a free, let me emphasize that word, free, 3-part video series for you to look at. All you need to do is go to our website under free offers, click off what you want there, and you'll be getting your access to it right away. I tie together momentum that a lot of people don't do with the pivot point. I think that's an interesting way to look at it. How do you get it? It's really simple. Go to the website, sign up, or call my staff. They'll drop it off to you right away via email. I'm Ira Epstein. You have a great day.